also get you the outlook coming in as far as the entire commodity space is also concerned. In fact, Dinesh Somani, founder of ProIntellitrade Services, joins us right now. First things first, what I wanted to try and understand from you, Mr. Somani, a very good afternoon, first of all. And the second thing that I really wanted to try and take a look at is oil prices right now, because there's a lot of volatility that you still have. On the one side, you do have the supply concerns that are really there, and that's something that you're thinking about when it comes to Brent crude as well as WTI. With regard to the disruptions on the back of this war, how are you looking at that entire side, coupled with some of the recent developments that we've had on the war front?
Yeah, good afternoon. And as I said previously, the major volatility is going to persist and is going to be definitely there. Secondly, the reason for the rise in crude oil prices is mostly the supply disruptions. And the fundamentals actually remain the same. That was the reason the prices went up to $117, $120, and they're back to $90, $95. So overall, in the last week, we have seen prices falling close to 20, 22%. And things goes as per the schedule. I mean, if the talks succeed ahead, the first round of talk was not that good, but the second looks like it is more attractive and going to be a positive note. So I think the crude oil prices are going to be under pressure. Prices targeting around $84, $85 in the next week coming so.
In terms of the next week also that you're definitely keeping on your radar as well, I just quickly wanted to try and understand what you think about the IEA forecast and the warning also on the demand growth. They've in fact sounded a warning that demand, in fact global demand, is going to be quite tepid going forward as well. How are you looking at that entire picture?
In terms of crude oil?
No, yes, exactly. So I'm talking about IEA's warning in terms of demand growth. Do you think that that's going to be a little bit of a concern for oil prices going forward?
Should be definitely there, because I mean, the way prices have risen, the demand is definitely going to decline. And earlier also, the supply was usual and supply was huge. The demand was limited. But just because of this happened, the geopolitical tensions happened and the war-like situation was created, the supply was disrupted, and that led to the sharp rise in prices, almost doubled from $60 to $120. So I think things are going to normalize, and there is going to be a downward pressure on these prices.
No, absolutely, and that's something that you're looking at in terms of adding to that little bit of wobble that we've also seen coming in as far as oil is concerned. I also wanted to try and understand what you think about gold prices right now, because you do have that higher for longer rate picture really capping the outlook as far as gold is concerned. On the other end, of course, there's that little bit of liquidity squeeze, some bit of volatility that should be supporting safe haven demand for gold, but it's not really doing so.
It's actually not doing so, but since last 7 to 8 days, we have seen a strong momentum coming up. Prices have moved up almost by 5 to 6% in last 6 to 7 days. With the USD INR that stabilizing around that 92, 93 level mark. But I think the international market is getting support around $45, $50 and should face a resistance around $49, $97. So I think a range of close to $400 to $500 is going to be there. But the momentum at present is looking quite strong. In Indian MCX market, we expect prices to test 1,58,000 probably in the next 10 to 15 days. The support lies at 1,53,000. That was a major resistance which was being breached yesterday. And anything around those levels, 1,53,000, 1,53,500 should be a good buying level. Upside expectation is 1,58,000. In terms of dollar, we expect it to test $5,000 shortly in COMEX.
No, absolutely. But I also wanted to try and understand if you think that, investors who are looking at fresh bets right now, what's the strategy that they should be adopting? Because there's a lot of volatility right now that you're looking at on the table when it comes to gold and silver. So if you're looking to make fresh bets, what should you be thinking of?
I think at present, the market is very much range bound. I say a range of close to $400, $500 is as far as gold is concerned. I don't expect to move beyond that 51, 51, 50 mark. So investment is not a great idea at this point of time. I think trading would be a better strategy. That to a range of $400, $500. In MCX, it is going to be a range of 5,000 rupees. 5,000 rupees.
No, absolutely, and that makes a lot of sense in terms of what you should be doing. So that's entirely the strategy also coming in. I also wanted to try and understand what you think about copper as well, lastly, going forward. What are you looking at in terms of the outlook here? Because there's been a lot of kinds of trades that we've seen for copper. It's not really ready to pick a direction just yet, at least in the week gone by.
tracking last 15, 20 days, the prices have moved up almost by 18 to 20%. There's a strong momentum coming up. In the recent time, from 1280 to almost 1390 level, almost 110 rupees move we have seen in copper. The momentum itself is looking very much strong. I think anything around 1270, 1265 will be a good buying level. Upside 1335 would be coming very much shortly. I think 1220 should act as a baseline support as of now. So copper is going to outperform as far as the base metals are concerned. Also the MCX metal index that is also having on a breakout level, expecting further 5 to 7% up move in that index as well.
And that makes a lot of sense. I also wanted to try and understand what you think about silver as well. Do you think that it's going to be moving in tandem with gold prices? That's the kind of trend that we've seen at least since the war started for the last more than a month or so. We've really seen that trend play out. But do you see a continuation of that also? Is that something that you're penciling in?
I think already moved up by 20-22% recently from 225,000 to 255,000. Most of the gain has been captured. I think it is capped at 265,000 on the upside. Downside 242 should act as a support. So a range of close to 20-22,000 would be visible. Not much upside, not much downside. Should be a range bound. Prices already moved up from $73, $74 to $80, $81 recently. 83, 84 should be the upside cap, a resistance zone. Downside 76 would act as a support.
Absolutely, and that makes a lot of sense. Just quickly before we let you go, I just wanted to try and get a sense of which metal you're most bullish on from the entire metals pack, and you can take a look at some of the other metals apart from precious metals as well. If you're looking at industrial metals, anything that you think really shines there as well.
Definitely, aluminum is looking too strong. 35.30 was a major resistance zone in LME metal, and I think that breathed up upside, expecting a target of $3,800. So in Indian terms, close to 400 mark should be visible quite soon. The aluminum is very much looking very much strong. Simultaneously, copper is equally strong. Anything around 1260, 1265 level should be a good buying bet. 1335 upside target. 1220 should be the stop loss.
Absolutely. Thank you so much for taking time out and joining us.